Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys had a great day yesterday as we saw a little bit of some sideways movement overall in the markets, but some fairly strong down move in the Globex session this evening. So we're going to go ahead and take a look at the markets from an educational perspective, finding out breakouts and reversals, starting with the S&P. S&P this morning is down 50 points. A cool 50 points that were dropped in the S&P, which is going to, translate to a fairly large move in the Dow as well. But you can see that we had looked at this area here for a potential breakdown, and we did break down below that level. Now, we broke down below it, but frankly, just chopped around it. The breakdown really occurred last night and in the overnight trading session, and so what I'm looking at for today is how do we re-engage on this short? We unfortunately didn't make it all the way back up into this region for a decent entry. And so now, as I look at this, I'd say, all right, looking at a 15-minute, where are, my strong entry possibilities? Obviously, this is probably the cleanest of all the entry possibilities. It's the origin of a very strong move down, a little bit of sideways, prior area of support. This is essentially retesting our breakout trade. But getting to there could be a bit of a challenge. When the S&P is down this much, it typically tends to go down a fair amount further. And so I'm okay with somebody getting short below this Globex low because I don't see a tremendous amount of demand to stop price from falling until you get to 37.16 on this 4-hour chart. So plenty of room for price to continue to fall in the Nasdaq. In the S&P. Now, looking at the Nasdaq, a couple areas of supply here that didn't get retouched. I would say that probably the next most logical area up above us, this is the cleanest. This is a pretty clean level up here, obviously very similar to what we looked at in the S&P. Would be 11,639 for a short entry as an opportunity to trade this thing to the downside. But it looks to be that we're rolling over at this exact moment. And so, could you pick up a nice rollover from here and then run that thing down? Looking at this on an hourly chart, we're getting some buying pressure in here, which could drive us back up even to this unbalanced wick over wick area right here, which is right around the London Open, which is also a pretty good time of day to take a look. So those are the S&P and the Nasdaq. The Russell, we actually had the breakdown dropped into a fairly clean demand area yesterday and got a pretty nice rally off of said demand area. Old demand oftentimes acts as new supply, and so that's really where we rallied back into it on this wick here. And so the next most logical entry would be a short right up in this area. If price comes back to retouch this 1715 by 1720 region, moving down from the Russell. So those are the levels, I think, in the equity markets that make the most sense. Certainly a slightly more bearish outlook on the day. In crude oil gave us a breakout trade earlier in the week for a nice run higher. And then yesterday I looked at this area here for a breakout, and we did get a decent breakout, and then it just fell right off of that. Didn't hold it throughout the day as prices sank all day long. I would say that your next best short would be down below 108, as that is kind of a rollover point. And then, are we seeing a little bit of a rotation out of energy? Because on a daily chart, this would be an official lower swing high. If we get below 101, then we would actually have a daily downtrend. It's not, we're nowhere near that as of yet, but that would be an official daily downtrend. So strong reversal candlestick here yesterday, a bearish engulfing candle on the daily chart, could make for the next leg down to be pretty interesting. Gold still in between our iron condor levels, expiration day on that iron condor level. And so looks to be a pretty safe trade still at this point. So if you took that trade, leave me a comment down below. Love to hear what you guys have to say about about those kinds of trades and what that style is. But looking at a directional trade, as we're finally getting close to an area where a directional trade makes sense, you've got this little breakout spot here at 1806. We've hit it once, we've hit it twice. Are we going to get basing in front of the level for a breakdown? And so I would look for the basing in front of the level to be the key for a solid breakdown trade. Um, that's ultimately, I think, what makes the most sense. We've got a copper level that, copper level that was up here that we set up earlier in the week that did come into play. So we got a nice entry into this level, and price has moved away from that zone. So if you are still in that trade, it's been very fruitful for you. Take your stop at this point, which we had put the stop right in here, and move that stop, I would say, down to about here. Locks in some pretty good profit and allows price to continue to run. So that actually, based off this base drop, got a nice move into the level, and price has started to move away. So hopefully you're able to take advantage of some of that trade as it's continuing to move. And then if you didn't get into it, but you still like the idea of getting short, look at this area right up here on a pullback. Look at this 374 by 375 kind of area. Natural gas. Looking at nat gas, we've got a little demand area down below us here. Starting to get a little bit of a rollover, but I don't see a whole lot aside from that. We had also looked at some of our currency markets. I'm going to start first with the euro. The euro is sitting right at a breakdown point. We actually came into a potential area of demand on this move right here, but our trend is down, right? Our 4-hour trend says, hey, I've got a lower swing low and lower swing high, so I need to wait for a confirmation entry. You did not get a confirmation entry. Matter of fact, it blew right through, thus telling you that that level's not really a level for a long entry. Now, if we do bounce up out of that level, look a bit higher to this region right here for a solid reversal trade. If we base where we are right now, look for a breakdown. The other one that we've talked a lot about, we talked about the New Zealand dollar short as well as the Japanese yen. So in the New Zealand dollar, we did get the breakdown out of the triangle pattern that we had talked about. So it has started to make its move down. If you missed it, there was a retest area opportunity here, which didn't get touched yet. And then there was this level here, which has already been touched, and price has moved away from it. So our target on this is for price to make it all the way down to this region here. If you're so inclined, you could even take a breakdown below 61968, as that looks like to be the next place that it's going. Japanese yen, we actually looked at a breakdown in the yen. We got the breakdown. The breakdown occurred 1, 2, 3, 4, 5, 6 candles later. You're sitting at break even, telling you should probably get out of this position. 6 candle rule came into play here, not giving us a quality move, and so look for the next opportunity on a breakdown, since the 6 candle rule told us to get out of this one here. Now, if you're not familiar with the 6 candle rule, go to tradersarmy.com. We have a tremendous amount of rules and understanding on how to take control of your trading experience, if you will. So that's all I got for today, everybody. If you guys have any questions, shoot us an email, support@tradersarmy.com. Until tomorrow, I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.